Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the Dow Jones, and we can also expect some corrective activity as the price moves up into the old highs here. So just drilling back down into this particular trend here to give us an idea where we are within that trend. We can see that where are we here? We'll have a look at the wave count on the S&P 500, but while we're here, the 13,500, you'll just expect a correction across that because we didn't have a reaction when we first got here to this level. We've got more like the overshoot pattern here, so that's more likely to see an A and a B and a C wave down to here. So the distance above will be the distance below, roughly, pinch of salt, and then we need to look for support back on the 13.5 after that to see further upside. But it is meeting supply over here. This block here would have a lot of volume in it, and that would be pegging that to this price here. Where are we here? Okay, so this is just the correction, still on the Dow Jones here, but we're looking for this as an A and a B and a C wave down to here, the distance above here at the 13,550, so 50 points. So we could assume that we would be back down here, in this case down at the 13,450. I could certainly be proved wrong on that because we've got China results coming out today for the GDP, trade figures and retail figures as well. So they will be out at, or the GDP will be out at 12 o'clock today. So, but yeah, so that will be the driving factor. The other little point too is that Thursday can open higher and trade lower. If it trades lower today, if that is the case, then we'll look towards the volume. If the volume was lower while the price was lower, then we know that it's just part of a corrective pattern, and we would be looking at Friday and Monday being up from that point there. So with the S&P 500, it's very much the same as well. So I've pulled this wave count apart a little bit further, and just to sort of drill in here from the low here, because we were counting this little 5 waves up through here, which is done and dusted, and then the 1 and the 2 back to here, and then we're looking for wave 3 coming up through here. But the way I've sort of pulled it apart and counted it through here, it's still going to the upside. So I think there's even still more to go there. But what does concern me is that I know that we're going into resistance sort of area here now at the 1460. So it is possible for us to see a move back into the 1450 there. But the main point is that we're trading local stock most of the time. So we're looking for a positive sort of outcome from this. So it's the same within Europe as well. In Europe, slightly different pattern. We've actually got on the FTSE here, we've got up for 1 here, and wave 2 coming back through here. And I feel that wave 3 is still unfolding to the upside in terms of up for 1, back for 2. And then we've got the 5 waves here for the 3rd wave up here. So once again, a 4th wave back into the 5-9 here, then a move up to make the top of wave 3. So we've still got a fair, then there's wave 4 and then there's wave 5. So we're still heading up. But I think one of the things to point out here is you can see that, this was the beginning of the trend. This is sort of the middle of the trend, right in the middle here. So that's the most powerful point. The one that, the wave, it's the 3rd wave of the 3rd wave of the 3rd wave, the 3rd of a 3rd of a 3rd. So that's the center of the structure there. So what we can expect up here is a slowing down of the trend process up through here. So and the same with the DAX as well, not extending out as much as the FTSE, but we've got this A, B, and C correction here, so we're expecting new highs to be made above these highs here. So that will take us up to the 75 here for the DAX. So there's still more upside here, as you can see. So we'd expect the classic trading levels pattern across here because we are having the reaction here. We've got the arrival, the reaction, the support, and then building up building up or accumulating positions here to give it a springbox to launch up through here, and then once it makes its new high, then it will come back and retest the support here. But basically a classic trading levels pattern across the 74 there. Yeah, so the Australian market is zooming along quite nicely, really based off the sort of the finance side of things. But because copper was back up today above the 372, it means that, well, in my small world, it means that the materials sector could be getting ready to sort of pop to the upside and catch up with the finance sector, because it's always the finance sector that leads out of large corrective patterns in a market, and the materials sector would follow in due course. But that will be obviously driven by China today as well, with its figures coming out. So we need to accommodate that as well. But as far as I see this trend here, this is still going. This is it's every trend and every correction's got a beginning and a middle and an end, and this is the beginning of the trend here. And then this is the middle here. So we still got the end over here. So we could reverse this pattern here and pop that on here to get waves 4 and 5 up through there. So as the last charts we put up, we got up for wave 1, ABC for 2 here, and this is the third wave moving up through there. I've got that a bit here. So we got up for 1 and back for 2, and we're looking for the third wave to move up. And I two things here. I had sort of conflicting things. I had that, I understood that we had wave 1 and wave 2 here, and I knew that we should get a strong third wave coming up here, but I also knew that 500 here would be holding the price as well. But it seemed to escape, and in terms of escaping, then you use group 1 here to trade that to the upside there. So this normally this accumulation process across here would be the normal distance, squaring this up here, squaring time up with price here, which is Richard Wyckoff's work, of course. But look, anyway, that's moving up through here. We may experience a larger correction across the 45.50 here, but larger won't be large. It would just be something like this here, and then finding support and then moving up here. The trend is still up, and there will be resistance at this area here, at the 65.72 and the 80, but we'll be gunning it for a higher price up here, so we can pretty much look up to the 46.50. But while we're here as well, is that in terms of the trading levels coming up here, the 45 is a minor trading level. So we've got the Fibonacci sequence of 4,100, 200 and 300, which is minor group 1. Then we've got the midpoint here, the 5 here, and then the next number up would be 8, so 4,800. That's where the ratio would be for the wave proportions to fit as such. But also too, with the 4,500 here, it's the 50% mark between the 4,000 and the 5,000, and support above this level here really puts the bias at 5,000, or at least there's some pretty tough numbers up above here. One of them is 4,772 and 4,800. They're the sort of biggies. The 4,650, the 650 as I call it, the 65 number, that's also going to have an impact as well, larger than the 4.6 and what we're going to see here. So, but anyway, all positive for the upside. Let's have a look at the metals. I think I said metals then rather than metals, but it deserves a medal for getting back above the 372 here, and it really helps finish the correction off here, and the correction that started back over here, this, as we've been tracking it through the A, the B and the C through here, and did it quite nicely too, because it really stayed in subgroup 2, which is the 65, 72 and the 80 here. So we'd be expecting new highs through here and up to the 400 up yonder, up here. That's what we'll be looking at through here. This doesn't count very well as an impulse wave here so far. It could be a series of ones and twos in terms of up for one and back for two here, and then up for one here, and then A and a B and a C here for for wave two of the smaller degree, and a wave three here. So it could pan out like that. But just to let you know that it is positive in terms that the A, B, C can be finished. It is positive that it's back above the 372. It is positive because the US dollar index has been pushing to the downside. So here it is here. As you know, we've been trying to work out the top across here, and and we've sort of seen it move on its way. So it will have some sort of support in this area here, because we've basically got wave one, wave two, and we've got one, two, be close to the third wave here, so we'd end up having a fourth wave here perhaps, and then a fifth wave down. So a bounce here, this bounce here would reflect back into the currencies, even the Dow Jones and so forth with their little fourth wave as well. But anyway, it's down, and that means that commodities will be up, and it's a trigger. This is the trigger for that to occur. So even though that we don't have a positive wave structure here, we could have, but at the moment it's still corrective. But being above the 372 and the dollar down, it really places that in a good position. But of course, the China thing today would have an impact on that as well. But look, generally sort of positive. So we can move into the materials sector. It'd be nice to get into BHP. We should have got into it, shoulda, coulda, woulda, a couple of days ago on a nice switch. But there you go. We'll have to find something else that doesn't gap, because it will gap today. So getting back into the gold one here as well. So of course there's always a reasonable relationship between the metal, different types of metals, and the gold here seems to be showing more of an impulse wave to the upside through here. As I mentioned before, if we can find support on the 1750, the midpoint, then we've got a positive market. So it can fail from here as a retest, but let's just see how this unfolds through here. And yes, it can come back can have an A and a B and a C back to the 1740 through here. But if it finds the support on the 1750, then we've got this little wave one to the upside, and we'll be heading higher from that point there. The oil market, I was expecting that to move up, but it's just followed stock, and stock was a little bit flat with the Dow Jones and the S&P 500. The S&P 500 moved up more than the Dow Jones, but they should catch up with one another. It's just that the Dow was stuck at the big number 500, but it should find support on that and push up from that point there. But those markets, the US indices and the European markets, they will have they're due for some type of correction. So that could bring the oil price back into 91 here before we see a push to the upside. And even pushing to the upside, we'd want good support retested support on the 92, and of course the 93 here. Support on the 93 would separate the thinking psychologically from the 90, and people will tend to think of higher ground. They'll think of the next number, which is 5. So the 95 they'll think of if we get support on the 93 there. It's the same for silver as well. With silver, it's of course the silver down here, the 32.72, the 272 is really important to me, as you know. The 33 here, you can see that this is gleaning support here. So the next level for this would be finding support on group 1, which would be the 33.30. So 10, 20 and 30 is group 1. So support on top of the 30, then that would give us would help us make this completed down here, while this is still below the 33.30, then it can be some type of corrective rally through here, and that would be the same for copper and gold and silver. So we need to be mindful, but it is sort of shaping up quite nicely, but we don't have the evidence in the actual structure. The structure for the silver and gold is better than the copper, but we just need a little bit more time with that. But sometimes you can't hang around too long, and you need to look for a trigger, and that 372 was the trigger. So we'll run with that. Let's have a look at the Australian dollar and the euro. Okay, back at the US dollar here, and you can see the Elliott wave count to the downside is panning out nicely. So we're still expecting a little bounce here for wave 4. The 38.2 retracement level for that distance there brings us back up to the 79.40. However, I think that it's a pretty strong move to the downside. So it should just stay within group 1 of 79, so 79, 10, 20 and 30 tops there. We'll see how we go, but also previous lows also bring in support as well. So, but look, anyway, just that little third, fourth there in one way or another, and also that will reflect back in in the Australian dollar and the euro more so, and the other pairs as well. So just keep an eye on that. But because it's strong, it should have quite a shallow wave 4 retracement level there as such. The Australian, the euro here doing the mirror sort of opposite within reason, and the wave count that we've been sort of following in the day ahead report here is been as such with the wave C and the 4 here, and up for 1 here and back for 2, and you can see the third wave moving quite nicely through there. So it's still cranking up quite strongly through here, and it's got more to go. If that could also have another little high here too before we see a corrective move back into the 131 here, but we should expect some type of correction in this area through here as a wave 4, and then we'd see a wave 5 to the upside. If the extension is in wave 3 here, then the wave 5 here will be roughly the same size as wave 1 here. So yeah, do I have that pulled apart further there? I'll just check in here. No, let me just check. Well, you can see that it's struggling here. Do you know what I mean? It's sort of struggle in here. If it found support on top of group 1, of course, the 131.30, nice support on top of that, then of course you go along from that point. But I'd wait otherwise, because it's really creeping here. Do you know what I mean? It's struggling to get up, So yeah, just expect that to unfold back in through here, and that would be the support area through here as well. Right, the Australian dollar is doing much the same as well. In the bigger picture here, Shane Rutherford, a good analyst, sent this picture through here for the bigger picture on the daily chart here. There's 2 possibilities, and we've also been toying with different possibilities as well. But he's got this one here, which is a little bit different in terms of having the D wave coming up through here. So the C wave, the same triangle pattern, the A, the B, the C, but the D wave coming further over to here, and then moving down for the E wave there. So that's another one to put into the pile there. So we'll keep an eye on that. For the in terms of trading, what we're looking at here is we were looking at this being first of all an ABC to the upside here, but also being mindful that it could turn into an impulse wave, and that being the case, the main trigger to go long from yesterday was the 102.72 there, and then adding on the 103 there, which was in the morning report, and of course coming back up to these areas here are going to cause resistance up through here as well. but it is really extending to the upside. So it really has the personality of a third wave coming up to the upside. But once again, too, what's coming out of Europe as well. These strong points, well, in the US, it was strong housing figures last night, but that shouldn't really have any impact on the Australian dollar as such. So there may be sort of leaked news that I'm not aware of coming out of China for the figures coming out of there today. So, or just in anticipation of higher figures coming out, but it could be buy the rumour, sell the facts sort of thing. So just be a little bit careful. But, even so, the move up through here as such, as I mentioned before, you got the beginning of a trend, then you got the middle of a trend, and then you got the ending of a trend. So we'll see what happens by midday today. But all good. Now, in the bigger picture, in the bigger picture, the 105 is the most important number here. The 104 is really important too from memory as well. But for me, the support on the 105 would flip the whole market to the upside, and I kind of think that's going to happen, because when I look at the copper market moving above the 372, it kind of tells me that's finished, that correction, and would be pushing up to the 400 there. And the finance sector has really sort of hopped along, and the material sector has really been sort of it's just been sort of slow. So just got to be a bit wary of that. Just looking at BHP here on the local market here, the ASX 200 for a change. I think I've pointed this out before. It's pretty simple, is that the Fibonacci number 34 there is really the key resistance there. So you can kind of imagine if that became support there, then the bias would be to the upside there as such. And today, because of copper being pushed up, this will pushed. This will move up into this space up here now. So, but it is that 34 there that is the important aspect as support there. But this is also a little positive pattern here, and I tried to get the switch a couple of times in here, but failed to do. We got stopped out there. But there you go. Okay, I think that's it. So we've got long trades in the market. Thursdays can open higher and trade lower, so just be aware of that. But that said, there is a nice strong trend to the upside, and any pullback would be just that. It would just be a pullback, and then we'd see further upside in all markets. So all good. Alrighty. Well, good morning and good luck.